Hello. If
Hi.
anybody's there, we're gonna give it a few more seconds, and let a few more people kind of get logged in, and then we'll be right with you guys. And I'm gonna go see who's at my door.
Awesome. If my thing is bright enough. Can't hear you. No? No.
Can you hear me now?
Yes.
Okay. Then that makes more sense. Probably should leave my audio on. That'll be the first thing.
We have somebody else tuning in.
That has popped in the room. I'll just give everybody a few more minutes because I know it takes a minute with it takes a minute kind of getting everything. Sometimes your computers don't work and things can kind of.
I really like the setup of this program.
Yeah, Webinar Jam. It's nice. Yeah. It's nice. Yeah, it's very user friendly.
Yeah, I see that.
Okay. Just wait a few more minutes and then we'll go ahead and get started. So
yeah, that's fine. I guess while we're waiting, we can kind of just chat.
Mm-hmm.
So what do you got going on this Friday?
This Friday is hopefully a relaxation and crab legs.
All right. Are you cooking them? Who's cooking them?
No, I'm going to buy them. Not happening.
Oh, nice.
Yeah, not happening. Like I said, my son went out of town with his father. So I have a praise the Lord, hallelujah moment of zen. Yes.
Moment of zen. I feel like
it's happening. So
it's good. That'll be a nice weekend.
Oh, yeah, I hope so.
Yeah.
Okay. Yeah, people are hopping out and hopping on. Well, like I said, we'll wait a few more minutes and we're just going to get started either way.
Yeah, that's fine. See some familiar names in here.
Right. So we love you all. But there'll be more last month. It was, people like, oh, that webinar is supposed to sign on to. And then kind of as they went on, more people hopped on a few minutes ago. So we'll start right at 2:05.
Yeah, that's fine.
What about you? What's your plan for the weekend?
I think I'm just gonna really relax, and I do have some stuff I want to working on some newsletter things.
Okay.
I think I'll carve out some time during the weekend to do that. Maybe in the morning. I might come to the office and do that so I can focus, and then spend the rest of the weekend kind of just relaxing.
Yeah, that's good.
Reading a good book.
That is good. That's good.
Yeah.
Yeah. Okay. All right. Well, it's 2:05. Let's go ahead and get the presentation started. We've got a couple people. I know people are probably going to be hopping in and out, but I did want to take a second and welcome everybody to the presentation. And like I said, my name is Brittany Shingles. I'm the president of Safe Title and Escrow. We are a Miami-based title company. And the other young lady on the line with me is Nadia Alcide of the Mortgage Biz. She is a licensed mortgage broker with several lenders, and they are also South Florida based as well. And so she's going to be doing a brief presentation about a few things. We're going to run through them. And here's an overview of the presentation, just a little bit that we're going to go to. There won't be a whole lot of slides. So if you want to take notes or if you want to kind of get involved, you want to make sure that you kind of get your notes handy and things like that. And we'll be answering questions at the end. But we'll start with the introductions, which we've already done just a bit, going over parties to the transaction, professional development tips, pre-approval versus pre-qualifications, down payments, contract closing from a lender's perspective, commercial versus residential lending and any major differences. And then we'll conclude with a question and answer period. And then we also have the pleasure of having Ms. Diane Taylor, who is also with the Mortgage Biz, and she'll be hopping in, with any comments that she has. She's a co-owner of the Mortgage Biz as well.
Yeah, I wonder if you can add her. Is there a way for you to add her?
No, there is no way with the program that I have. I can only have the two presenters that we have, but she will be able to kind of select that speak button down at the bottom on the right hand side. Hopefully, it's available for her, and then we can add her in and let her kind of have the conversations that she wants to have.
Awesome.
Okay, so I already. That's who we are, and that's everybody there. So why don't we start like we agreed to start with the parties of the transaction that we had talked about previously. You just kind of giving from your perspective who the parties and the parties are to a real estate transaction.
All right. So if it's going to be just a typical real estate transaction as far as from the residential perspective, so most of the things that I'm saying today are from a residential perspective, and so I want you to keep that in mind till I go off and talk about anything commercial. So from a residential perspective, you have your realtors, right? So I say realtors plural because not all the time we have two realtors, but most of the time you do. It's on the selling side and the buying side. And then you have your mortgage professional, which is me, right, who deals with the financing. And so I'll talk about that financing piece further along. Then you also have your title agent or your title company, which is somebody like Brittany and Safe Title and Escrow, where they help to be that third party to wrap up the entire transaction, right? But sprinkled in between that, you also have an appraiser. An appraiser is somebody who appraises, which is evaluates the value of a home. And so you have that appraiser in between. But then also on my side, you have underwriters who will have to look into seeing or vetting to make sure as the person's trying to get a mortgage is able to get a mortgage. So they ask me a lot of questions, but typically buyers or sellers won't really get involved with underwriters. That's what why I'm here to field all those questions and ask you or the buyer for the conditions. And then there's inspectors. So that's from the beginning of the transaction. So inspectors are not appraisers. They look at the quality of the home, trying to give you idea of if you should purchase this home, if everything's in working order. It's an optional thing, obviously, but it's something that buyers really should do because it's an investment and they'd like to know really what they're getting into. I'm sure you would want to know if the property had, a 20-year-old roof or something like that. Man, I'm just trying to think like who else.
Well, no, I don't want to cut you off there, but I would make this point because I always hear home inspectors after their presentations say this, that they're not creating a list of everything that a seller has to fix before closing. Because I think a lot of times that confused as well. And they're just letting you know what is wrong so you can make a decision on whether or not it's worth buying, but not creating a list of, things that need to be corrected prior to closing. So that's
exactly.
That may be on there.
Yes, I mean, that's true. So, and then just thinking about that, and I'm just trying to run through just system of who we deal with, but those are the pretty key players of a real estate transaction that you're going to come in and deal with from a day-to-day basis whenever you're working on a file.
Okay. Okay. Sounds good to me. Okay. Hello, Nadia. Okay. I don't know why you can't hear me. Yeah, I'm just going through the things, just the room chat right quick.
Oh yeah, I saw those, but it's all right.
Okay. Yeah, I don't know. There's a little speak button on your left-hand side. It may be there for you, and that may make it available. Okay, so any professional development tips for, this class is aimed at new and young realtors. What are your professional development tips from a lender side? What do you think that some of the young realtors need to know about getting clients and vetting their clients and about taking their clients out? What do you think that some of the things that we kind of discussed previously?
So my biggest thing from the mortgage side of things, I really think that realtors should have an understanding of what we do and also like what we don't do. And I say that because it makes the transaction way smoother when everybody does their respective jobs well.
Mm-hmm.
So communication, like just first and foremost, is like a really big thing that's really helpful in a transaction. So if you have good communication skills, and that doesn't just mean talking, it doesn't mean just mean writing. That means, hey, letting people know what's going on each way of the transaction. So like for me, I have an obligation to let all the parties know, hey, this is what's happening in the loan right now, right? Here's where we are in the transaction, or hey, we've come up against an issue, but we have enough time, and here's the solution to it. The best thing, like the best realtors I've worked with, they're able to communicate well, but then also come up with solutions if something is going awry. They're not looking for me to figure it out, because technically, if you look at a real estate transaction just from an outside bird's eye view and you're looking at the contract, you will notice that I'm considered a third party, right? Although I do love and care for my clients, I'm still considered a third party. So it's really between realtor and realtor, which is the seller and buyer. That's really who the contract is between. Yes, I have an obligation to meet my contractual duties as far as getting the dates straight and making sure we close on time. But certain things are not like what I'm responsible for. So I would say that, but then also time management really plays a big part on, being a successful professional, not just realtor, just a successful professional altogether. And so it's really important that you keep a calendar and you are impeccable with your word. Like if you say you're going to reach out to someone, or if you get a call from someone, call them back. Don't be that professional where they're like, oh, they're too busy, they never call me back. You shouldn't really be busy to not call somebody back.
Right.
Yeah.
I think that's important. I think that's important. And I think communication is a skill. We don't always have it, just kind of naturally. And I think it is something, like I was telling a client the other day, a developer that I work with, and he was asking me how is his realtor, because she's the listing agent on all his properties. And I said, she's good. I said, she communicates. That's the biggest thing, is that she communicates with me. She lets everybody in the transaction know where we are. And I was telling him that that's one of the things you always want to look for in a realtor is, are they answering the phone? Are they responding to emails? Are they sending out updates on their end? Because if they're not, things get lost in translation. They get lost in the silence too, because
yes,
fill in gaps with information that's not there. And oftentimes those deals. So I thank you so much for saying that. So before we move on to the pre-approval versus the pre-qualifications, like, as far as that mean, what does that mean to you? I don't even know. What does it mean, pre-approval versus a pre-qualification?
Great. So I'll start with the pre-qualification part because that's like, super simple. So the pre-qualification is like, all right, I sort of look at most of your things, but not really. And I do it based on hearsay, right? So it's like, all right, yeah, you told me you make 50,000 and you told me you have no debt. Okay, so based on you telling me that in your credit score, here's your pre-qual letter. But really, if you want something solid, you should have a pre-approval letter, right? So the pre-approval, and at Mortgage Biz of Florida, we do a full document pre-approval. So we are pretty much mini underwriters ourselves, looking at initial documents, right? And so making sure the income checks out. So even though we had an initial consultation and you did a self-assessment and you told me what your salary was, or you told me what your hourly rate was that you get paid, I still have to do my due diligence and check, right? So this is where I'm doing that due diligence, checking bank statements. So seeing, hey, do you have enough saved for your down payment and closing costs? Because a lot of the times there's an assumption that you only have to pay for the down payment. And so that's where I have that conversation with the buyer, saying, hey, yeah, actually, you do need additional money over the down payment. Because for me, like in this pre-approval stage, trying to work as proactively as possible will make for a better transaction on the back end. So we go, I call it slower, but my pre-approvals usually happen within 24 hours as long as I can get those documents to me. We go slower so we can go fast, right? So in addition to the income and the assets, I take stock of those. We do a hard credit pull, not a soft credit pull. I want to look at everything and let you know, hey, here's what needs to be done, or we can move on and you can be pre-approved. And so looking at all those things, determining the debt to income ratio, which is an important ratio in my field, knowing how much house you can afford based on your current income and liabilities. And your liabilities are the debts that you owe on your credit report. And so once I go through all those, I can provide a confident pre-approval letter that says, all right, this is pretty, good. I went through everything. But obviously sometimes when you get to underwriting, the pre-approval is not always guaranteed. And I also want realtors to understand that too. It's not that because I don't hand out pre-approvals, willingly. They have to really show the motivation and provide all the documentation to me before I can hand out a pre-approval letter. But things do happen along the transaction. Like you can find out certain things that maybe I wasn't privy to in that original conversation, which is okay. And I let my clients know that, and that is listed in the pre-approval letter. But I know some people just give pre-approval kind of like throwing spaghetti at a wall to see if it'll stick. But frankly, I don't have time for that. Just like point blank, it doesn't make sense for me to spin my wheels in that way. Okay. But when I mentioned to go slow, going slow in the beginning to go fast. So remember, I collected all those documents in the beginning, handed the pre-approval. They went and found the property. And so as soon as you find the property, I have those initial submittal documents, and I don't have to ask you for them again until we get further down into underwriting, and I may need updated copies. So you already know what you need.
Right. Yeah. That's pretty good. So I think, we were discussing that and discussing the pre-approval. We were just saying the importance of getting, so we were speaking about the importance of getting a pre-approval letter before you take a client out shopping. And you touched on it briefly, but I don't know if you have anything more to say about it, but I want to know if you wanted to touch on that or expand on that a little bit more, the importance of getting a pre-approval prior to house shopping, and what does getting your client pre-approved mean for house shopping?
So it's so important, although to the outside world, it may look like a piece of paper, but as I said, we're doing the background work to make sure that you're, qualified enough to get through underwriting and, hopefully make it to the closing table. That is our greatest intention, getting the home buyer their keys to their property, their investment, or their second home. And really it saves, so that goes back to the professional development piece, it saves you as the realtor time, right? To know that the person that you're actually taking shopping for this property can afford it, right? They have all their ducks in a row, because it would be a waste of time for you as the realtor to go out, show somebody your property, and they don't have enough in their bank account, or they don't make enough, or their debt to income ratio is too high, and everything just blows up. Like, I know that's what you learn. Like, contracts are important, right? You have to adhere to those guidelines, just like I have to adhere to the dates that are listed in the contract. And so if you can't adhere to that, then there could be some issues that happen in the long run, disputes about escrow, which you can speak to what that is when we go to the down payment section, which is coming up. But yeah, so it's so important that you work with someone who, yes, has like good communication as a professional, like whoever your lending partner is, because you want them to be able to hand out a pre-approval that, all right, they really took the time to understand this person's entire profile so that there are minimal surprises throughout the transaction.
Right. Very good. Very good. So, so how has everything, of course, we're in the midst of a pandemic. How has the pandemic and COVID-19 and everything that's going on right now? I got an email from my underwriter the other day saying, how is this affecting your business? How is this affecting people as far as getting pre-qualifications? I mean, like, what are some of the things you're seeing, of course, in your business? And then also, what are some of the things that, your underwriters and things are reaching out to you about?
So COVID-19 has really, changed the business, but I'm super thankful, like still busy. There's people who are still qualified to purchase or refinance. Some of the guidelines have gotten a bit stricter, but it looks like as things are starting to open up again and people are wrapping their heads around what's happening, they're loosening some of them again. So some of them are falling off, right? So some of the lenders, and because I'm a broker, I have a lot of different lending partners, and that is an advantage for the buyer because based on whatever on their situation, I can probably close a loan with like whomever, right?
Right.
So say I remember in the news, like people were posting this all over about how Chase is like, oh, you can only have like a 720 and you have to put 20% down. Well, that's not across the board with every lender. So I don't want people to just see that and then hold on to that and think, all right, I'm not qualified. You should really reach out to someone and say, hey, here are my self-assessed numbers and figures. Do you think I would be able to get to the closing table, right? So like, yeah, I do still have lenders that will do a conventional at your 640. Will do, other stuff, or your 620, right? I do have people doing conventionals at your 620. But you just have to know during this time of COVID-19, some of the rates that were there, like the amount that you would pay for the rate was a little bit less prior. But as long as you have the funds, you'll still get a low interest rate because interest rates are still very low, but it may cost you a little bit more. And so just having that understanding, because a lot of people are working from home now, but it hasn't changed for us, like the turnaround times of when people get back to us and the loans that we're able to close. It's just that only certain people can qualify now. But as I've said to everybody during this, like that's been my education piece, is like if you were kind of ready before or you're on the fence thinking about it, okay, you can still be on the fence thinking about it, but make sure all your stuff is in order. Make sure you're repairing your credit if it needs repairing. Make sure you're getting down to saving. Make sure you're doing those things, that pre-work during this time, so that when you are like, all right, cool, I think I got it, I'm ready, you don't have to get ready to get started.
Right. Can you talk about what the minimum credit scores are? I know I get people all the time You know, because people see me posting pictures of closing, so they assume that I'm a mortgage broker, and I'm like, no, that's not what I do. I actually work in title. But then the next question is, well, you know, ignoring what I just said, you know, what do I need as far as credit? How's my credit going to be affected?
Yeah.
And I don't ever know that piece. But you mentioned, you threw a couple of numbers out there, things like that. What are the minimum credit scores to go for FHA loans right now? And can you explain the difference for some of the people that may be on here? What is the difference between an FHA and a conventional? And then what are the minimum credit scores? If that's too much, you know, it's a loaded question.
So if I forget, I hope I don't, I will be like, what'd you say again? But so minimum, right? Pre-COVID-19, I'm just going to say pre-COVID-19 across the board, the minimum for FHA, 580, right? There are some lenders out there who are still lending at 580 who don't have what's called overlays, which is like those updated guidelines. And then for conventional, it's 620, right? And the difference between FHA and conventional, right? So FHA is considered a government loan. Government loans are FHA, USDA, and VA loans, right? And I'll explain the difference between the three of those. So FHA is usually a first-time home buyer. First-time home buyers are considered somebody who hasn't owned a property in the last 3 years, right? Or just never owned a property at all. But people don't know that you could be considered a first-time home buyer if you haven't owned a property in the last 3 years. VA, so it's the veterans loan option. So it's for people who are in the military currently or previously in the military, retired, reserves, what have you. And that's done through the military. We have a special website that we have to do things, and that gets down into the nitty-gritty. But as long as you work with someone who understands the process and what needs to be done, then you're in good hands. And then USDA is, you'd be like, oh, what is that? Is that the people like who deal with the meat and the agriculture? What? So USDA is kind of similar around that. Like it's where you're in a more rural area, right? And so in the rural area, they're trying to get people out there to live there and develop it. So USDA, you don't have to put any money down. And I forgot. So VA, you don't have to put any money down either. But FHA, the minimum down payment is 3.5%. So FHA is usually attractive for your first-time home buyer because of a few reasons. Their credit may not be up to the minimum 620 for a conventional, but even if it is high enough, maybe they don't have enough for a down payment, right? And so that's where they would fit into the FHA profile, or their debt to income ratio needs a little bit more room. And so FHA does allow for a larger debt to income ratio, which is sometimes above 50%, but at, typical, it's like 50% is the debt to income ratio for an FHA.
Okay. Okay, great. So you touched a little bit, and let's say if anybody has any questions in there, Gloria, I do see your question. Just give me a second, and we'll catch those at the end. Okay.
Yes. Actually, I guess we can do the question and answer at the end. That's fine.
okay. Yeah, I don't know however you want to do it. I don't know.
Yeah, I can actually answer that right now because I know I talked about debt to income ratio. So debt to income ratio is like student loans can affect your debt to income ratio because it's your monthly payments, your monthly liability that we talked about. But certain lenders, so lending products, will determine them differently, right? So that's based on the guidelines that I'm looking at in the back end, but I'll share those with you. So like Fannie Mae, which is a conventional, like one of the conventional GSEs, right? They look at your loan amount, like 1% of your loan amount, or what's listed on the credit report, right? Or if Freddie Mac, which is another one, like same like Fannie Mae, they will look at 0.5% or what's not listed on your credit report. And so sometimes I will try to, if somebody has a lot of student loans, I'll try to see if they qualify for like a Freddie Mac because they take 0.5%. FHA looks at 1%. But I know people ask, but hey, I don't pay anything on my credit report. It's zero. I can't use zero. We can't use a $0 payment. It has to be 1% of the loan amount or a number listed on your credit report.
Okay.
Yes.
Okay. All right. Good. I'm glad we were able to get that in. Spoke a little bit about down payments. Can you explain? Because we always hear this like 3.5%, 2%, 5%, 20%. That's always thrown out there, and I don't think we have very many people that actually kind of understand what is the down payment and how much it has to be. You know, all of that information. Can you touch on that briefly for us?
Yes. So down payments are contingent upon the program that you decide to go in, your loan program, but then also contingent upon your needs and your goals and also what you have available. So I'll start with the lowest amount of down payment and then, go to the highest, right? So the 0% down, remember you can only do those really and truly with VA and USDA. If somebody tells you that you're putting 0% down on a conventional loan or an FHA loan, they are probably giving you a second mortgage, okay? Just keep that in mind. Then when you move on to FHA, minimum 3.5% for FHA. And so that's the minimum, but you can put down more if you'd like. FHA does come with private mortgage insurance. And so
that's for the life of the loan.
Yep, exactly. That is for the life of the loan. But I tell people who, like I said, if you can only qualify for FHA right now in this season of your life, you can still refinance into a conventional and get rid of those mortgage insurance payments.
Right. And it gives you a lower overall payment.
But I remiss, like I went to 3.5%, but there is a program, a conventional program, depending on how much money you make and depending on what area you're in, where you can put 3% down.
Okay.
So they're home ready and home possible programs. And so it just really depends like on what you make. I think the minimum in most places is like 51,000. But it really does depend on the zip code. So I wouldn't know like all the zip codes in Florida, but I have a website that I look at to see if somebody meets within that criteria. And then I did the 3.5%. So then 5%, say if you make 52,000 or more, right? You can do 5% down as long as your debt to income ratio is not an issue, right? So you put 5% down on any conventional loan, but you would still have mortgage insurance.
Right.
And you get to 80% LTV, loan to value. And so 80% loan to value means that you've paid or you have 20% of equity to the loan in your house. And you can ask your servicer to remove your mortgage insurance payment.
Okay.
For that 20%. And then a lot of what we hear is that 20% down, right? And so the reason why we hear that 20% down is because of that mortgage insurance that I discussed, getting you to that 80% loan to value, which you wouldn't have a mortgage insurance payment. But I tell people all the time that you shouldn't really be so focused on that mortgage insurance payment because, to be honest with you, it's really not a lot in the grand scheme of things. It's a really small percentage of your loan that you pay per month. And so if you can accelerate your payments, and a lot of the loans that I write don't have any prepayment penalties, you can, pay extra, get that down, refinance, whatever, so that you can get to your 80% LTV in a quicker amount of time.
Okay. Okay. Very, very good. Very good. I think that's and then I just want to say that, down payments, um, they don't have to be all paid at the time of contracting. When she's talking about down payment, that, that's just how overall what they're going to bring in is cash to close along with their closing costs at the time of closing, but it doesn't have to be paid all right then. I always like to stress to people because they hear 5%, they're like, I don't have 5%. So yeah, just understand that in the process. So that's the down payment. So a brief overview. The next thing that we were going was just a brief overview from contract. When you have the home, you've already found it, you have the home under contract, and then you're taking it all the way through to closing. Just a brief overview from a lender's perspective, because every month I do at least 2 or 3 presentations from a title perspective, what goes on with me on what I need to clear prior to closing. But can you speak about what lenders or what mortgage brokers have to go through? Because I think the mortgage broker, from my perspective, the game is changing. Whereas things used to happen that you guys would originate the loan and then kind of toss it off to someone else. You guys are kind of moved into a seat where you're really taking it from contract to closing.
Yeah.
Can you speak about what it is that you guys do?
Yeah, and for me, it's just important for me to like touch and like understand what's going on with my loan. Like I would just be like, if somebody called me and said like, what's happening here, like just knowing the steps, although I do have somebody to help me like go through the steps, I don't know what the heck is going on, right? So contract, awesome, congratulations.
Right.
Contract. So the contract gets sent to the parties that are privy to it. So that would be me, you as the title agent, and then, the realtors back and forth. So when I get the contract, I'm looking through it and I'm looking for specific dates. I'm looking for date of closing. I'm looking for, all right, what's the period for the financing? So then I can make sure all of my stuff is set. Me, on a personal level, I put that all in a calendar so I can just track the dates and be on top of my stuff. And then the first thing I do is reach out to title and ask them for their fees. And the reason why I do that is because I want to have accurate fees or accurate enough fees on my initial loan estimate, right? And so once I get the fees back, that's when I can get to the loan estimate, like get to my portal, enter in all the fees, and distribute the loan estimate, right? And so the loan estimate, what that is giving the borrower an overview of the potential costs for this loan, right? So from my origination costs, for me, any processing costs, but then going down into, hey, how much is it going to cost to pay someone like Safe Title and Escrow to get this stuff done, get their title insurance, like a whole list of things are on there, and they're broken down pretty easily. But I know for someone who doesn't see it all the time, it can get confusing. And so I do open up, my time after I disclose for them to, reach out and give me a call so that we can discuss all the fees. And the fees will also include like taxes, initial escrows, and I'm sure, should I explain what escrows are? You want to explain it?
Yes, please explain what escrows are. Because the reason why I say that is because people always wonder why their cash to close is so high. And they're like, they have an idea of what the down payment is, but they're like, why is my cash to close so high? And I'm like, it's because they're escrowing.
Yes.
So go ahead and explain that for the
Yeah, so escrows is really like, think of a bank account where you put the money away, right? Just saving it over there, like out of sight, out of mind kind of thing. And you're putting in that money to initially start that, right?
Mm-hmm.
The reason why there are escrows is because they want to make sure that your taxes and your insurance are going to be paid, right? And they collect it for you, and it's rolled into your monthly payment that you make. And that's also that goes into your debt to income ratio too. Yes, so that goes into your whole housing ratio to know if you can afford it. So I'm looking at that, HOA, like all those things. And I want to say that, I know I'm getting off topic at that point, but I want to say it because a lot of realtors, I don't think they understand that I have to look at the HOA or maintenance fee or whatever. I have to look at the taxes. I have to look at the insurance, right? Just to make sure, all right, even with the mortgage payment and possibly the mortgage insurance, that as a whole, you can afford it, right? Because that would be a disservice to someone being like, oh, I piecemealed it here. And I'm like, you can afford the mortgage, but I don't know. I don't think you can afford the insurance. It just wouldn't make sense in the long run. And so I said all that to say I can't remember now.
No, we were just talking about initial escrows, and so what they are.
The escrows.
Yeah.
And another thing is, depending on the profile of the borrower, they can end up waiving escrows if they like, but it's not a suggestion I usually make because some people can't stay on top of when they need to pay their tax bill or when they need to pay their insurance bill. But if they're responsible enough to do that, then they don't have to get those escrows collected each month.
Okay.
But FHA, you must collect
escrows. Yeah. And they usually, I mean, what's the standard number? And I guess this is just for my own, gratification. I mean, is it 3? Because usually I see about 3 months worth of.
Depends on the type. Depends on the time of year that you close.
Okay.
So, gosh, I don't have the calculator. I have a special calculator that I just see how much. But right now, if somebody's closed right now, I have to collect about 9 months of escrow.
Wow. Right. And so when she's saying this, for the people who may not understand, so they have an idea of what it costs for the year, for a year's worth of taxes, a year's worth of insurance. And what she's saying is they divide that by 12 and then they get 3 months of it. Now she's saying if you close right now, they're going to get about 9 months of it. So that's going to boost up your cash to close, your closing costs. So that's a very good things. Okay, so we left off, we were at the contract phase.
Oh, yes.
We left off at loan estimates. So what comes after that? Can you touch on loan commitments and, all that stuff that goes on?
So after you get the loan estimate, you review it and you sign the intent to proceed, or the borrower signs the intent to proceed. Once they proceed, we know, all right, cool, we can send them into underwriting. And so remember when I talked about the pre-approval portion where I collect all those documents from the beginning? So I have them, right? So all I need to do is once they sign, I sign and then send it off to underwriting with those respective new submission documents. And so then when those new submission documents go in, it's say about a day or two until they come back to me as the broker to say, all right, we're based on these little things, we are conditionally approving them. And so conditional approval does not mean final approval.
Okay.
All right. A lot of people are like, oh, I see the word approve.
Right. It's enough for me, right? Yeah.
All that really means is all right, they looked over the initial stuff and seems about right, but now we need to look into other things. So they will send me conditions that I may have to send to the borrower. And some of the conditions could include things like, hey, we looked at your tax return, we need a tax transcript, but usually they pull those. Or, hey, you owned another property here, can you explain that? And sometimes the person didn't own another property, something popped up, and we just have to explain that. And so once you get through that process, right, so I won't belabor conditions, those just checking some boxes, getting some stuff done. Mm-hmm. Once that happens, in between that, I'm ordering title from you. Mm-hmm. Because that's one of the conditions I have to meet. And I already know that because that happens in every transaction. I'm trying to order that as soon as possible. And then once my client, this is the way I do it, once they've gotten through their inspection period and they know that they are going to actually purchase that house, mm-hmm. then I order the appraisal. And I order the appraisal, try to order it early on so that there are no delays or any issues with appraisal coming back late. Okay. And then if parties need to negotiate, then they have the opportunity and time to do so. I don't need anybody blaming me for anything. That's like me. I'm like, nope, I gotta do, nope, next.
Right.
And so once I order the appraisal and say the appraisal comes back, and everything looks fine. This is from like I'm going like, everything's like this.
Yeah.
Then I can move forward and submit all my other conditions. Once I submit all my other conditions, then it can be put into, and I submit like all this other information, I can send out what's called an initial closing disclosure. And so when I first talked about the loan estimate and closing disclosure look just alike, right? Yep, no problem. They look just alike. And with the closing disclosure looking just alike, like the loan estimate, you can see all the fees and what's going to make sense for you going forward. Then after the closing disclosure, you're fine. You're good. I can't hear you though. But then after the closing disclosure, you do get the clear to close stage, which is an exciting piece for all parties. That means, hey, the buyer is going to, like, they're so close to getting their keys and signing their documents, and we've made it pretty much to the finish line. And so after that, I work with the title company to balance the fees to make sure we've got everything, right. And they've got everything right, and figuring out what's what, and then scheduling the closing, and people come to sign. So then that's really it. But I do my clients to let them know if there's opportunity to refinance or whatever.
Okay.
Yeah.
That's very good. Very good. I'm sorry. Nobody ever knocks on my door, but
twice in one day, right?
Twice, right? Nobody ever comes. Okay, so I guess we're rounding up, and we want to keep it at about an hour, so I think we're in good shape. But just a lot of realtors, especially a lot of young new realtors, and this is what we spoke about previously, kind of want to hop into the game, and then they're like, I want to be a commercial realtor. I want to be, and can you just speak on commercial lending versus residential lending? I know from the title perspective, the documents aren't really that much different. I mean, there are a few things in my experience, but as far as the paperwork, it's generally the same. But can you speak from a lender's perspective? One, about what do you feel about young and new realtors hopping into the commercial game right off the bat? And then two, just differences in the lending. So that's realtors getting into commercial lending, and what are the major differences in the two kind of lending styles?
All right, so I happen to do a lot of residential, but dabbled in commercial. Diane, my counterpart, she does more of the commercial side, right? Mm-hmm. A lot of the differences are, I think people assume when you're going to go like commercial, like from a lending perspective, commercial versus residential, that the interest rates will be the same. They're not the same, and that the structure of the loan will be the same. They're not. Like, we look at some different things, especially if somebody's purchasing from like, a business perspective where they're using their business income. And so they base it like 10 years at a fixed rate, and then it'll end up like changing based on what's happening in the market. And I don't know if people understand that when they're jumping into getting into the commercial side of things. Don't recommend, unless you have a mentor, to jump in face first in commercial, because I feel like you should really, cut your teeth in regular residential, because it's no easy feat anyway in regular residential either. And it just gives you the opportunity to say, okay, this is the type of professional I'm going to be, regardless of if it's residential or commercial.
Right.
And I know commercial can look really glamorous and sexy from the outside, which is, I'm sure, why a lot of people are like, oh yeah, I'm going to get that big payday, whatever.
Yeah.
If you have a mentor, I do not suggest that you go in there and you try to just figure it on your own. Mm-mm.
Yeah. Yeah, that's good. That's good. I feel the same way. I mean, it's just harder. I know from being, you know, I think I became a realtor about 2011 or so.
Mhm.
I mean, it was difficult for me to get any residential clients, more so any commercial clients. So it was very difficult. It was very difficult.
Yeah, you gotta really, so like this is another thing that I guess professional development, you gotta really be intentional about a strategy.
Yeah.
As to how like you're going to meet your clients, what type of clients are best for you. Like you only know like you're one of one. And so not everybody serves the same person or the same type of people. And so just remember that, but then also be willing to learn, be willing to, you know, understand that you're new. Don't get frustrated because like, man, okay, there will be moments of frustration in this. But I think if you, your mindset is pretty much everything, remaining positive throughout whatever it is that you're doing.
Right.
You're like, oh, yeah.
It's easy, right?
Yeah. So it's good. It's really good.
Okay. Okay. Well, that is great. Now we can open up to a question and answer period. If anybody has any questions, you can put it down in the chat box, or there's a speak option. I'm not sure if anybody sees that other than me. But yeah, you have that option as well. I don't know. Okay. Yeah. And I see Nadia was able to type in there.
Wait and see.
So, yeah, that if you guys don't have any questions.
Oh, actually, there is a question.
Oh, you see one? Oh, great.
Yes. So Mr. Nadia Alcide says,
Excuse me.
how long does it typically take to close on a property if they have all their loan qualifying ducks in a row? Good question. So honestly, I've closed the loan in under 14 days.
Boom.
And it could happen that quickly. It could happen in 7.
Yeah.
But that also depends on like the other third parties, right? So some things that I can't control, they may not come back fast enough. And so I would say usually I ask for 30 days. I usually can get it done sooner. That's usually the intention. But 30 days if they have all their loan qualifying ducks in a row. And it says, can a first-time home buyer purchase to have it as a rental property? So FHA, you do, so I didn't mention this, FHA, you do have to live in the property for at least a year.
Residence, yeah.
Conventional, no, like you don't have to be owner occupied per se. It's not, so with FHA, you have to be owner occupied for the first.
Yeah, and generally you're going to see something in your loan package. One of the documents that you're going to have to sign is something called a conditional assignment of rents. And that's you agreeing that should you foreclose or anything like that, that you're basically assigning every bit of any rent that you are collecting over to the lender to make up that shortfall in your mortgage. So that is something that's there as well. So I don't think they intended for your, your ability to be an investment property, but if it is, they make sure that when you're signing those loan documents that you obligate yourself to continue to pay that mortgage. So, yeah.
Yeah.
Okay.
Well, thank you so much for asking that.
Thank you. Yeah, if you guys don't have any other questions, I'd like to thank everybody who is here. I appreciate you. The replay will be available on YouTube. The next, oh, wait, here. No, Gloria's come back with another one. Thank you so much, Gloria. Gloria, conventional.
No, actually,
go ahead.
So Gloria, I'll answer your question. No, conventional loans do not require 20% down. You can put down as little as 5% on a regular conventional loan, as long as your debt to income ratio works with that 5%.
Okay. I hope that answers your questions. Can you go ahead and tell us what your, how can people get in contact with you? How can Gloria, get in contact with you if she has any questions that she can speak to you about?
Well, first I want to say thank you everyone for coming. I really appreciate it and tuning in and engaging and asking questions. The best way for you to reach out to me is by email. You can email me at Nadia, Nadia, at mortgagebizfl.com, or you can give me a call. My phone number, 954-600-7308. And I'd be happy to answer your questions for you and figure out if you're ready to buy or whatever it is that you have questions about related to the mortgage industry.
Right. So I just put our email addresses in there. My website is Brittany@safetitleco.com. You can follow me on Instagram at Safe Title Co. You can, of course, follow our YouTube channel. And I want to make sure I invite everyone to the next month's webinar, which will be more geared toward homeowners. And you'll be seeing that if you're following our YouTube page, or if you're our Instagram page or anything like that, you'll get an email blast if you're on that email blast as well. But thank you so much, Nadia. It's been a great talk. We're right at that, almost at the hour mark. So that's where I kind of wanted to hit.
Yes.
But thank you so much. And we look forward to working with you in the future. It's always been a pleasure to work with you in the past. Okay.
Likewise. I appreciate you. Thank you so
All
much.
right, lady.
All right.
Thank you, everybody. Bye-bye.